Hey everyone, welcome back to Corporate Decoder, where we unpack the hidden stories in corporate filings. And today we're looking at NovaBay Pharmaceuticals. And let's just say they've been busy making some big moves behind the scenes. This report is packed with significant operational and financial shifts that could reshape the company's future. We're talking about new investors, major stock changes, and even a change in leadership. So buckle up, because this is going to be a wild ride through a corporate transformation. And if you like getting these straight-to-the-point insights from SEC filings, make sure you are subscribed. Also, we have a fantastic Discord community where we break down even more of these reports. The link is in the description down below. So what we have here is a current report, a Form 8K, which companies file when they have a really important event to announce that shareholders need to know about. Think of it as breaking news for investors. The important date here is October 16th, 2025. And that is when a lot of these events kicked off. This report covers a range of critical changes. It signals the entry into material definitive agreements, unregistered sales of equity securities, material modifications to security holder rights, changes in control, executive departures, and even board shuffles, and amendments to their core corporate documents. The story starts with deals involving former CEO David Elliott Lazar. He entered into a securities purchase agreement, which we'll call the SPA, to sell a lot of company stock.
He got paid almost $10 million for these shares. Specifically, he sold over 400,000 shares of Series D convertible preferred stock and assigned his rights to buy over 260,000 shares of Series E convertible preferred stock.
This whole deal wrapped up the very next day after the stockholder meeting. Now, a huge part of what made these deals happen was getting stockholder approval at their annual meeting on October 16th. Without that approval, none of this could have gone forward. And what is really important here is how these preferred shares, the Series D and Series E, convert into regular common stock. Each share of Series D was set to convert into a whopping 160 shares of common stock. This means over 77 million shares of common stock were slated to be created from just the Series D conversion. The Series E shares, which were also bought by these new investors, convert into 160 shares of common stock each as well. That is an additional 43 million shares of common stock. So, in total, we're looking at over 120 million new shares being issued just from these preferred stock conversions. That is a massive dilution event for existing shareholders. But wait, there is more. They also issued something called pre-funded warrants. These are essentially promises to sell more shares in the future. They sold over 5.4 million of these pre-funded warrants, raising about $6 million. The price here is interesting. It is set at $1.10 per warrant, which was actually a bit higher than the stock price at the time. This is often a way to signal confidence, or to get a slightly better deal for the company. These warrants can be exercised starting in January of next year, but they also need stockholder approval to be fully realized. These sales were done through exemptions from registering with the SEC, meaning they weren't offered to the general public, but to specific types of investors, in this case, accredited investors. Now, let's talk about how this impacts the existing shareholders. One of the biggest changes approved was a reverse stock split. They got the go-ahead to do a reverse stock split, meaning they can consolidate shares, reducing the total number of outstanding shares. The board has the power to decide whether it is a 1-for-2 split, or as much as a 1-for-10 split. The main goal of a reverse split is usually to increase the stock price, and sometimes to meet exchange listing requirements. But it can also significantly change how many shares people own and potentially impact voting power on a per-share basis, though not necessarily on a total ownership basis. And this leads us to a major point, a change of control. Because of all these new shares and warrants being issued to RO1 Fund LP and Framework Ventures IVLP, these two entities now hold a significant chunk of the company, specifically 45.1% each of the outstanding common stock after the Series E conversions. This clearly signals a change in who is effectively in charge. With this change of control comes a big shakeup in leadership. As we mentioned, David Elliott Lazar, the former CEO, stepped down on the 17th of October. Several other directors also resigned from the board on October 16th. The same day as the stockholder meeting, it seems like the new investors wanted to bring in their own team. And who's taking the helm? Michael Casley has been appointed as the new CEO and chairman of the board.
His background is deeply rooted in finance and digital assets. He has been the managing member of one of the companies that just invested heavily, RO1 Fund LP, since 2023. He also has experience managing crypto funds.
This indicates a strategic shift towards potentially leveraging blockchain or digital asset technologies, or at least a finance-led strategy.
To accommodate these changes, they also amended their official charter.
Scroll the Certificate of Amendment amends Paragraph A of Article I-4 of the company's amended and restated Certificate of Incorporation to provide that the company is authorized to issue a total of 150,500,000 shares of capital stock for a composite. This amendment dramatically increased the total number of authorized shares the company can issue. They can now issue up to 1.505 billion shares. That's a massive increase from what they had before, allowing for significant future dilution if needed. Let's quickly look at the voting results from that crucial annual meeting on October 16th.
They voted on electing directors. Notably, David E. Lazar, the departing CEO, was among the nominees.
All the nominees, including Mr. Lazar, were approved. This might seem a bit odd given his resignation, but perhaps it was a formality tied to the transition.
Proposal 5 was also super important. This was the vote to approve the massive issuance of shares from the Series D and Series E preferred stock conversions. The 77 million and 43 million shares we talked about earlier.
And importantly, this proposal passed, meaning the stockholders gave the green light for that huge increase in common stock.
Proposal 8 was for approving the reverse stock split, which also passed. This gives the board full power to implement it. Proposal 9. To increase the authorized common stock to 1.5 billion shares, also passed with a strong majority.
However, Proposal 10, to increase the authorized preferred stock from 5 million to 10 million shares, failed. This is an interesting detail. It means while they can issue a lot more common stock, their ability to issue more preferred stock is still limited.
Finally, this section lists the accompanying documents, like the Certificate of Amendment and the form of the pre-funded warrant. Exhibit 3.1 details the actual amendment to their corporate charter that increases the authorized share count. And lastly, the report is signed off by their Chief Financial Officer, Tommy Law, on October 20th, 2025, officially certifying these events. So, what does all this mean for NovaBay Pharmaceuticals? It is clear that significant fresh capital has come into the company, accompanied by a complete shift in control and leadership.
The new investors, RO1 Fund LP and Framework Ventures IV LP, are now in the driver's seat, as evidenced by the appointment of Michael Casley as CEO.
The massive increase in authorized shares and the approved reverse stock split suggest a strategy focused on restructuring the company's share base, potentially to make it more attractive for future funding or to meet stock exchange requirements. However, the failure of the preferred stock increase proposal is a point to watch.
It indicates that while they can flood the market with common stock, their flexibility with preferred shares might be curtailed for now. This move seems designed to consolidate power and set a new direction, likely with a focus on financial efficiency and perhaps new ventures, given the new CEO's background. The biggest risk for existing shareholders is the significant share dilution that has occurred and will continue to occur as warrants and preferred stock convert. The opportunity lies in whether this new leadership team can effectively deploy the capital, streamline operations, and drive future growth. It is a company in transition, and the next few quarters will be critical to see if this strategic overhaul pays off. All right, that is our breakdown of NovaBay's latest filing. What is your take on these major shifts and what they signal for the company's future? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps the channel, and subscribe for more deep dives. Don't forget to check out the Discord community in the description for more. Thanks for watching, and we'll see you next time.